This video is sponsored by Otis. Imagine you have just won the lottery. A cool $10 million now sits in your bank account. In a Zoom meeting with your wealth manager, they offer you two options. Invest it all in stocks and bonds just like Warren Buffett, or buy some trading cards. That last option might seem crazy, but the value of trading cards has skyrocketed in recent years. Those featuring LeBron James, Michael Jordan and Mickey Mantle are constantly selling for up to $5 million each. Experts claim that they will be worth upwards of $10 million within the next decade. These are cards that someone originally collected from a pack costing little more than $1. Welcome to Athletic Interest. This video will show how a humble cardboard cutout has risen from cheap marketing stunt to multi-million-dollar trophy. Here's how intense nostalgia, but also corruption and bad business decisions have shaped one of America's fastest growing investment industries.
What could be more refreshing than Newport menthol cigarettes?
The first collectible cards were introduced by tobacco tycoon James Buchanan Duke in the late 1800s. These small slips of cardboard were decorated with the faces of famous actors and placed inside cigarette packaging. Sales of Duke's cigarettes exploded with people of all ages becoming addicted to collecting cards. Despite a growing love affair with collectible cardboard, demand would eventually burn out in the early 1900s. The 50s saw the first renaissance of card collecting in America. Rival chewing gum companies Topps and Bowman began creating cards with the biggest names in baseball and basketball. Both companies saw a massive boost in sales, with people desperate to collect every card. Topps would eventually purchase rival Bowman and enjoyed a 25-year dominance of the trading card market. It was not until 1980 that the Topps era was finally ended by a federal antitrust suit. With the Topps monopoly broken up, the NBA, NFL and other leagues began handing out licenses to multiple manufacturers. Over the next decade, both the supply and demand for trading cards rose dramatically. From 87 to the early 90s, in what is now known as the junk wax era, production is estimated to have hit 80 billion cards per year. Anyone who has taken a business class is probably aware that once the supply of a product outstrips the demand, prices start to fall. In the mid-90s, disaster struck. Player strikes in the MLB, NBA and NHL saw the demand for sports cards fall. The card companies were caught off guard and sales fell almost instantly from $1 billion to around $200 million a year. 90% of America's 10,000 sports cards shops shut their doors, and most collections were rehomed in the basement or sold off in yard sales. The sport card market had officially collapsed. All was not lost. The value of rare cards continued to increase. The Mickey Mantle card, worth $1 in 1960, was sold for more than $5 million at auction in 2021. This is not an isolated incident. The PWCC 500, which represents the 500 most valuable trading cards, has increased in value by over 270% since 2008. To put that in perspective, the 500 most valuable US companies have increased by 160% in the same period. The business has matured since the 90s. Overproduction is no longer a concern. Since '96, the leagues have focused on exclusive agreements with manufacturers. Topps holds the rights to Major League Baseball. Panini has exclusivity for the NBA, NHL and NFL, while Upper Deck controls NASCAR. The restructuring of the market also saw the introduction of rare cards, produced in low quantities, often containing pieces of a player's jersey or slices of wood from their bat. The 90s also saw the establishment of card grading companies like Beckett's, PSA and SGC. In return for a fee, the card is given a rating from 1 to 10 based on rarity and overall condition. After being assigned a serial number, it is sealed in a plastic case and recorded virtually on a database. This standardization of card quality allowed potential buyers to estimate a card's price by comparing it to the value of similarly rated cards. The higher the grade, the higher the price. Thanks to online marketplaces such as eBay, collectors could purchase cards sight unseen and rely on the quality score for reassurance. trust had returned to the industry, and cards started changing hands at an increasing rate. As demand rose, the prices dutifully followed. Strangely, it would take one of the worst pandemics in human history to truly reignite America's obsession with trading cards. With COVID-19 cancelling sports and replacing nail-biting live games with predictable replays, people started to look for new opportunities to get their sporting fix. Those who had grown up in the card boom of the 80s and 90s dusted off their collections and used forced isolation as an excuse to revisit their childhood passion. Bankrolled by a disposable income they never had as kids, people tried to rebuild their collections. This nostalgia was truly set alight in 2020 with the release of The Last Dance documentary. Netflix reminded everyone of the heroics of Michael Jordan and the mighty Chicago Bulls. The cards exploded in value overnight. Michael Jordan cards were suddenly worth 10 times as much, and eBay's sales increased by 370% in 2020. With the market on a rebound, you may have felt the urge to start investing. Perhaps you considered selling your car and remortgaging your house for that Michael Jordan rookie. Before you go breaking the piggy bank, let's understand if trading cards make a good investment. It goes without saying that you should never consider a 15-minute YouTube video to be actual investment advice, but here are some considerations. David Leiner, a vice president at Topps, has been recorded saying, "We don't ever tell people to buy trading cards as an investment." Leiner might have a point. The sports card market has collapsed twice, and the current boom is not free from fluctuations. Basketball cards lost 20 to 30% of their value when the 2020 season ended, before recovering shortly after. But there is one type of card that always seems to hold value: rare cards of legendary players. It's these cards that make up the PWCC 500, which has outperformed the regular stock market for the last 12 years. Vintage stuff has a strong foundation, it's graded. That's why we are seeing the numbers we are seeing. The value of an original Babe Ruth or Joe DiMaggio card has held even when some of America's largest and most profitable corporations have fallen. In the words of Jeremy Murray, "It's the most steady market. You're not going to have anybody getting injured, not get into the majors, have a scandal that takes them out of the good graces of society. The value is not going to drop like a card from a modern-day player. They're not making more vintage. Whatever is out there is out there." As with most things that involve humans and money, there are reports of corruption. In 2019, the FBI launched an investigation into auction house PWCC and grading company PSA. The allegation? They have altered, trimmed, and bleached cards to make them seem more valuable. In April 2020, collectors filed a class action lawsuit against the two companies for consumer fraud, misrepresentation, and artificially inflating prices. In 2015, Bill Mastro, a former card auction heavyweight, was imprisoned after admitting to inflating auction prices and altering cards to increase their value. Corruption is something that all high-value investments have suffered and most have survived. What about the demand for cards? Is this a fad or will demand continue to rise? Card sales on eBay more than doubled in 2020, with 4 million more cards sold than in 2019. Most experts are confident that this trajectory will continue into 2021 and beyond. Growth is not limited to the US, trading card sales rose internationally. If this rapid growth maintains, card prices could reach entirely new heights. Current investors will feel vindicated after Wall Street started showing interest. In January 2021, the Chernin Group and its collection of high-profile celebrity investors injected $40 million into industry-leading auction house Golden. While demand seems to be growing, the artificially restricted supply of modern cards has raised some red flags. Topps and Panini could simply decide to increase their printing and flood the market with cards. Most of the valuable modern cards would instantly drop in value. While the card companies may have exclusive rights over the leaks, there is nothing stopping competitors creating cards with athletes. Artist Tyson Beck has gone directly to athletes and helped them create their own limited edition trading cards. He has collaborated with Tyler Hero and Donovan Mitchell, with most of the cards selling out instantly. Topps recently copied this idea. They announced a deal with #1 NFL draft pick Trevor Lawrence to create a limited 50-card run. This bypasses the exclusivity that Panini has over the NFL by not showing any club or league logos. The card companies may artificially limit their own supply, but what if a new competitor starts making cards with the same players? How will the value of the original cards be affected? No one can be certain of what will happen, but with athletes embracing a deeper entrepreneurial spirit, it is unlikely many will pass up the opportunity to sell their own cards. Sports cards have had an unpredictable history, but no one can argue that rare cards have held their value. Investing in a Mickey Mantle has become just as accepted as purchasing fine wine or a rare sports car. For those that say it's just a piece of cardboard, many would respond that wine is simply crushed grapes and a sports car nothing more than old metal. Investing in modern cards seems to include more inherent risks. Demand needs to keep rising and supply must maintain. But one thing is for sure. When you mix the passion and competition of sport with the intricacies of a billion-dollar industry, there will be fireworks. If this got you interested, but you don't have $5 million lying around to buy a Mickey Mantle card, you should check out our video sponsor Otis. Otis is the stock market for culture, an alternative investment app that allows anyone to buy and sell shares of culturally relevant pieces like sneakers, art, or trading cards. You could, for example, buy shares of LeBron's rookie card or this piece of Leo Messi from 2004. Although our favorites are probably these AJ1s, game worn by His Airness himself. If you're living in the US, you can download the app and sign up for free to follow and invest in the weekly drops. Or you buy shares of past drops from other Otis members. You can then earn a potential return by selling your shares, or if Otis sells the underlying asset you invested in. Sign up for Otis with the link in the description and get your first share free when you fund your account. For full disclosure, all of the research and writing for the video was completed without knowledge of the sponsorship. None of our sponsors have editorial influence over our work.